$40 billion one loan for a stake in OpenAI.
Which, to be clear, is not even a public company yet.
Masayoshi Son is doing Masa things at a scale that makes the Vision Fund look like a savings account.
The Vision Fund lost $40 billion, Nate.
I know, I was there, spiritually.
So his solution is another $40 billion bet?
On the thing that might actually win this time.
That's either genius or the sequel nobody asked for. We're getting into all of it. The rundown.
Okay, Nuveen dropping $13.5 billion in cash for Schroders. Cash, not stock, not a merger of equals, cash.
Which tells you everything. You don't pay cash when you're uncertain. That's a conviction bet on scale in active management, right? When active management is getting absolutely steamrolled by passive flows.
Analysts are calling it a defining moment for legacy asset managers. I'm calling it two people on the Titanic deciding to share a lifeboat.
That's dark.
It's accurate.
Fair. Okay, Hapag-Lloyd and Zim, $4.2 billion container shipping consolidation continues its relentless march. If you've been sleeping on how concentrated global shipping is getting,
You should wake up, yes.
moving on, Rohm, Japan. This one's actually fascinating. Denso, the automotive supplier, reportedly tabled a 1.3 trillion yen offer. That's roughly $8.7 billion. Rohm's stock surged.
Japan's industrial giants are quietly running their own chip sovereignty playbook, and nobody in the West is paying enough attention.
Nobody. It's accelerating faster than people realize.
Okay, I have to read this next one because I cannot say it with a straight face. Sphere 3D is acquiring Cathedra Bitcoin in an all-stock deal.
Two struggling companies finding each other in the dark.
Wall Street is, quote, still deciding if it's a bold crypto pivot or a case study in bad timing.
It's both. It's absolutely both.
Last one, Royal Cup buying Farmer Brothers Coffee, commercial coffee consolidation.
Genuinely did not have coffee M&A on my bingo card this week.
And yet here we are, someone's getting a very large cup of synergies.
Please never say that again.
Noted.
Oh, and USA Rare Earth buying Texas Mineral Resources for $73 million in stock. Small deal, big thesis. Domestic critical mineral supply chain. Everyone's scrambling on this.
73 million is a rounding error in this episode, but the strategic signal is loud.
Very loud. All right, none of it is the actual story today, because Masa is back.
Masa is so back on the big one. $40 billion, not to buy a company, not to merge with anyone, to take a stake in one.
And it's a loan. SoftBank is borrowing $40 billion to invest in OpenAI. That's not a bet, Nate. That's a religion.
Masayoshi Son found his God and his God writes code.
Okay, but let's actually sit with how large this number is. Most leveraged buyouts, the big ones, the ones that make headlines, don't touch $40 billion. This would dwarf them. This is structurally insane.
And that's exactly why it's interesting. The Vision Fund was already swinging at things no one else would touch. This makes Vision Fund look like a index ETF.
That's not the flex you think it is, given how Vision Fund went.
Fair, I'll take that one.
But here's what genuinely puzzles me. OpenAI just closed a massive funding round at a valuation somewhere north of $150 billion. SoftBank is now trying to borrow $40 billion more to get further in. At what entry point does this math work?
It works if you believe OpenAI is not a company. It's infrastructure, like the rails everyone else runs on. And whoever owns a meaningful chunk of that
Controls the toll booth.
Exactly. Winner take most. Mess has been saying that for years, and everyone laughed at him with WeWork.
They weren't wrong to laugh at him with WeWork.
No, absolutely not. But even a broken clock, right? If the AI race really is winner take most, being OpenAI's biggest financial backer is not a terrible position.
I don't disagree with the logic. I disagree with the price. $40 billion in debt to buy a minority stake in a company burning cash at scale, in a regulatory environment that's getting more hostile by the month. The bank's syndication risk alone on this.
Which is exactly why we watch how the syndication goes. If banks start getting cold feet passing this around, that's your signal that the smart money has reservations. Even Masa doesn't.
Right. The loan market will tell us more than any press release.
And honestly, even if the deal falls apart, this announcement did something. It reset the conversation about what an AI investment looks like in 2026.
It told every other sovereign fund and pension watching quietly that the bidding war is not over.
Masa just raised the table stakes for the whole table.
Speaking of people consolidating their way into relevance, Nuveen just made a $13.5 billion play for Schroders, and that one actually has me more conflicted. Voices.
Okay, so the phrase making the rounds right now is Masa doing Masa things. That's the actual consensus take on a $40 billion loan.
Which tells you everything. When the market's best analysis is essentially, yeah, that tracks. You're in uncharted territory.
To be fair, what else do you say? The Vision Fund was supposed to be the crazy swing. This makes the Vision Fund look like a treasury bond.
And analysts are not wrong that it's a swing for the fences move. But I keep coming back to the structure. You're borrowing $40 billion to buy a stake in a company with no public market price. How do your lenders even underwrite that?
They don't really. They're underwriting Masa's conviction, which has a very mixed track record, but also produced some of the greatest returns in venture history. So
WeWork.
I said mixed.
I'm just keeping score.
Fair. But here's the pattern I keep seeing. And this connects to the Nuveen Schroders thing too. Capital is consolidating around scale right now. $13.5 billion for Schroders. $40 billion for an OpenAI stake. These aren't bets on individual companies, they're bets on being too big to lose.
Okay, that's actually an interesting frame. Analysts are calling Nuveen Schroders a defining moment for active management. But I read that as two legacy players realizing passive investing is eating them alive and deciding to at least get eaten together.
Romantic.
Very. Two drowning firms, one boat.
The boat costs $13.5 billion.
It's a nice boat. Look, what I want to know is whether SoftBank's syndication actually gets done. Banks have to decide their appetite for this in a still volatile rate environment. That's not nothing.
And we'll find out soon, which is actually where we should go next. What's actually closing this week and what to watch. Spill the tea. Okay, Sphere 3D is acquiring Cathedra Bitcoin, and I genuinely cannot tell if this is a strategy or a support group.
Two struggling companies walk into a bar.
And merge. Because what else are you going to do?
I looked at both of these balance sheets, Nate. I'm not saying it's a bad deal. I'm saying it's two people splitting a bill they both can't afford.
That is harsh. That is genuinely harsh. I'd call it more of a shared vision.
A shared downward trajectory, maybe.
Wall Street's still deciding, apparently, which tells you everything.
When Wall Street takes that long to figure out if something's bold or desperate, it's usually desperate.
Fair. Okay, moving on. Day one, biopharmaceuticals. Stock is doing that thing.
That thing where it goes up for no publicly stated reason right before acquisition rumors start circulating.
That exact thing. Someone's been talking in the biotech back channels and they weren't subtle about it.
I love back channels. It's such a polite word for what's actually happening.
I will not elaborate on that.
Smart. But here's my favorite story of the week.
Oh, is this the AI one?
Deal Flow Agent, an AI startup that helps other companies do M&A. Just raised, are you ready? $750,000.
The deal advisor needed a deal.
The deal advisor needed a deal. In 2026, nobody is too meta for a fundraise.
Honestly, respect. That's a very on-brand move.
It really is. Okay, speaking of moves that are absolutely on brand for one specific person, Masayoshi Son just tried to borrow $40 billion. We should probably talk about that.
We really should. Tomorrow's radar.
Okay, tomorrow. Sotera Health. 381 million secondary offering settles March 6th. We find out if Warburg Pincus and GTCR actually got out clean.
I think they do. The book was covered. This one's a formality at this point.
Maybe. But secondary offerings in this rate environment have surprised people before.
Fair.
The bigger watch for me is the SoftBank syndication. Banks have to show appetite for a $40 billion commitment. That's not a small ask.
That's a clear your weekend ask.
And Nuveen, the BXMX and DIX fund mergers targeting March 30th. Shareholder communications start hitting this week. I'd watch for any last-minute objections.
You really think anyone objects to a Nuveen housekeeping merger?
I think someone always objects to something.
That's genuinely your life philosophy, and I respect it.
We've got the SoftBank deep dive coming up next. And honestly, Nate has opinions.
I have so many opinions.